Well, I have a good one for you today. Cue the fire. Actually, I got two cue the fire today. It is that hot in here. And what I want to do, cover in this video, is like, how does it all end? So I want to pull back and take a look. Because I know so many people are like, oh my gosh, it hit the fib 50. It's never retraced. We're going bull market. The bear market is over. Well, are you sure? Because I think you might be missing two very important critical moments that need to happen, which I have some good news for you. I'm bringing on one of my good friends, Steven, and we are going to debate this. So without further ado, let's jump into the charts and Steve. All right, guys, so I have Steven Van Meter on. He's a good friend of mine. We go back a couple years. We always bounce macro off one another. Well, actually, he doesn't bounce it off of me. I bounce it off of him because he is the expert. Actually, let me throw it over to Steve. You hit the mic. Steven, give my audience a little background of who you are.
Yeah, thanks, JB. Again, I'm Steve Van Meter. I'm a retail money manager, a macro enthusiast, a YouTuber, fill in the blanks, all kinds of things. So but I'm here on your show. That's what's more important than that.
Yeah, it's okay. Thanks for coming on. Okay, so real quick, everyone's like, oh my gosh, bravo, digits go up today, market higher by 1 point, but no one can really kind of pull back and see the big picture of what the hell's really going on. So everyone gets focused. Steven, please tell my audience, let's pull back and give everyone a big picture of this whole stock market shenanigans.
Yeah, that's a great place to talk about, because what have we conditioned that happens in bull markets, right? Buy the dip, buy the dip. Oh, you didn't buy the next dip, keep buying the dip. So when you start to get into a bear market, you get these bigger dips and people are like, oh, well, it has to just be a dip in the bigger scheme of a bull market. And you hear that from the investment banks. Oh, the economy is just slowing down a little bit. It's going to boom in the second half. What do we hear from the Fed? We hear from out of the White House that, oh, it's just a slowdown. The recession, if we have one, is probably behind us because that's just the way the government works. It's okay. And so people start looking at the technicals, something you do on your show on a regular basis. You see, wow, look at these weekly charts. This thing is massively oversold. This is bear market bottom territory. I'm in. But is it the right time? And the answer is not even close, because there's two major things you need to look at. One, the yield curve is inverted. Markets do not bottom when the yield curve is inverted at all. It doesn't happen. It's usually a sign that this is the early beginning of a bear market. Second factor is the Fed. I know a lot of people think, oh, well, they're gonna pause, they're gonna cut back, they're gonna end this tightening cycle. That doesn't matter for equities, because there's a lag in monetary policy that could run 9 to 18 months before these rate hikes actually hit the economy. And so here's what we know, JB, that the market doesn't bottom until the Fed's gone from full hawk to full dove. They've slashed rates to as far as they can go. They've cranked up the QE engine. So what we're facing right now is quantitative easing is going up. Next month, it's doubling in size. We got some lags from the roll off of the mortgage-backed securities that are going to start hitting then too. And so all of this is going to accumulate with a withdrawal of liquidity in the markets. And there's your bear case for why bear market rallies are addicting. They bring people in, but they don't last.
Okay. And those were the two things, because I said, like in my intro, before we even talked about it, Steven doesn't even know he covered. I'm like, we're doing two things. It's the damn inverted yield curve and the Fed. So those are the two things. Now, like, basically, let's wrap this up, because I wanted to keep this video short, simple, to the point, get people, prepared. Okay. Well, how do we prepare? Johnny Bravo, what would you say would be safe havens now, and then in the future, where we run into?
Safe havens, dollars, treasuries, things that are highly liquid. Where are we headed to? Well, if history is a guide, then whenever this bear market rally ends, and it doesn't mean it can't go higher. So if someone listening say, well, what if the market goes higher? It can. And you know this, it can go absolutely higher, but when all the enthusiasm, when it pulls all the money in, and liquidity continues to get drained by the Fed, the yield curve is telling us that future growth and inflation expectations are lower. We saw in the New York Fed data today that, of course, the manufacturing index is crashing to great financial crisis era levels. look, it's telling us the market's headed down. That's what's coming. Whether or not you choose to hedge it with dollars or bonds, maybe you use short options or other kind of tools. Whatever it is you do, you should take a look, because the market is screaming the bad things are coming.
I would agree with you. So also, I want my audience to understand the way, and you could correct me if I'm wrong. I'm a swing trader. Steven just basically goes, oh my gosh, look how cheap this is right now. Buy. Oh, hey, look, it's even cheaper. Buy some more. But at some point, he won't be buying no more, and he'll be buying something else. So explain like your mindset of as a trader or an investor, so they understand, because I'm a swing trader. I'm like, buy, sell, buy, sell. I'm ADHD. That drives Steven crazy. He's like, I don't know how the hell you do it.
Yeah, it's true. I don't know how you do it, but look at it this way. There's two ways you can invest and you can trade. Now, the problem is some people invest all of their money. That's me. They take very long-term approaches and they just keep buying. There's some people like you that trade it all. So there's finding the happy medium. You have the money you're investing. For that, you should be looking to longer term macro cycles and saying, look, I should probably hedge that. Does it mean I need to sell everything? No, because the problem is people sell everything. The market goes down, it bottoms out, and then all of a sudden it rebounds and they're sitting in cash. And then it takes them 6 months, a year, or 2 years or longer before they get back in and they miss out. So you got to have some exposure there. Now, from a trading perspective, right now, all of a sudden you're going to look for those swing trades to help you to hedge. And so you kind of want to have a balance. And I think that's really important.
Yeah. Cause for me, I'm like risk adverse. So I look at something and I'm just like, get in, get out, get it. Like I'm taking bites. Steve's like, I'll wait for this one. This is going to be a good one. We're going to have a payday later on. So you guys make sure you like go over to his channel, Steven Van Meter. He has Market Timer Pro. It's free right now, right?
Yeah,
it's free
for limited time.
I know it is not going to be free, so grab his free. Also, I'll do like a 1 day, whatever, link in the description, how to swing trade this stuff. If this is something that you want to do, like you may have to wake up in the morning and do some trading, but that's I get scared. I have made one play, and Steven knows I did a bond play. I saw a damn Head and Shoulders, and then it started to break, and it's like, I'm looking, this stuff is really cheap, but we have a Head and Shoulders that has to play out here. I'm like, okay, 1 year. And I told him, I said, and it confused my audience. I'll tell you, Steven, my audience was like, what are you doing? This isn't I'm like, this is long term. Just shut up. I'll be fine. So right. Steven has promised me I will be fine.
Yeah, right? And I think it's a good for your audience to see that you can have long-term positions and you can still trade. The problem is when you get too extreme of either side, that you could be on the wrong trade. If you're like me, you get on the wrong trade for a while, so you have to just keep buying and buying and buying. If you're swinging on the wrong side and you get held in an overnight and there's a big collapse, well, now you're in trouble too, and you have to get more aggressive. It's always about creating balance and using your trading side, where you have some risk, but you're not overblowing it, and then you have your long-term money as an investor. You do that, I think you're a winner, no matter which style of ours that you adopt.
Right. It's good to have a balance, because my audience would probably respect this. A lot of my audience is crypto, and this is the problem. They fall in love with an asset and they think this asset is going to save the world. For me, I mean, I like crypto. Steve, not so much. I like Bitcoin. Steve, not so much, but that's okay. And I have to fight that to not fall in love with it, which so many people are like, no, this is going to be money. And I say, well, you got a lot of governments that are going to fight you on that with a lot of weapons. So I wouldn't risk it all on that. It's okay. If you want to, you do you. But I see it. So so Steve, thanks for coming on to help my audience get like, where we at, what's going to happen, how you trade, how I trade, and just some wisdom so people can understand kind of both of us on where we come from. And then I'm going to leave it. Go ahead. You end this thing and whatever you want to do, buddy.
Yeah, I hope I'm wrong about crypto, and I hope I'm wrong about other things too. But here's the thing, JB. There's one thing I've learned, and I've been through two recessions. I've been in this industry two recessions. There's always something people say is different this time, and it almost never is. So I hope I'm wrong about crypto, but we'll see. When we go through a recession, how does it play? If it goes to infinity and people get really rich, I really hope they do. If it goes down a lot, well, maybe that's the time to get in. But recessions are game changers. You shouldn't actually think you know what's going to happen until you've seen an asset class go through it. And then you know with some degree of probability what's going to happen the next time.
All right. Well, again, thank you. Enjoy your day at Disney World, and I will see you guys tomorrow.